Well, we're doing it. We're launching our YouTube channel and uploading clips from our weekly call by popular request. For those of you who haven't been able to make our calls or haven't even attended any of our calls, then you can see what we're covering in them. And then if you want to attend, then registration link below in the comments. For those of you who attend on our weekly basis, thank you for joining us and participating in the conversation. We are uploading these clips and these videos so you guys can continue to go back and revisit and pick up more information that you may have missed on the live call itself. Today, this is our first video that we're uploading, and this is the call from October 8th with Joseph May, our securities attorney, where he goes over and covers entity creation, entity structure, 506B, 506C, that kind of stuff, and tries to bring as much value to you guys as possible. So have a listen, drop a comment below, follow, subscribe, and come back for more, because we're going to be uploading clips from previous calls over the last few months, and we will continue to do so. Enjoy.
Okay, so we will we'll go pretty high level on these slides because we could get in the weeds on these things. I was telling Corey and Joseph as we go through the legal things, if you have any questions, if you want to go ahead and raise your hand, we can just dive into questions as they come up. We will have some Q&A at the end. This is primarily targeted towards people that are putting together investment deals, specifically under Reg D, 506B, 506C avenues. So yeah, we'll jump into it. So just quick overview on Reg D, 506B, 506C. What the difference is a 506B is more of a private raise. Friends, family, I mean, this is like your friends and family rounds, colleagues, people you have a previous relationship with, any type of connection that you have. That's a 506B. 506C is where you can broadcast it broadly. You can put it on Twitter. You could talk about it. You could come on here and talk about it to people that you don't know. The biggest difference is one, under a 506B, you can bring on 35 non-accredited investors. Now they need to have a level of sophistication to them. And like I said, there's no solicitation. Under 506C, they have to be accredited investors and you can advertise it broadly. Under 506C, you do have to verify their accredited status. And there's various ways you can do this. It's not that complex. Easiest way is generally a letter from an accountant or attorney stating that they are an accredited investor. Um, uh, so some of the pitfalls, where do people get in trouble? This is usually the first question people have for me when they reach out or we start working together is, how do you stay out of jail? The first thing, the first line on that is just tell the truth. We'll dig into the other things, but people get in trouble when they lie or they lie to cover losses. If you lose, be honest up front. If there's losses, tell everyone. Most people that are investing money or should have the ability to lose money. Those are the type of accredited investors you want, because it is an investment. People understand the risks. Second thing you need to do, make sure they understand all potential risks that investment entails. Alberto, you did a great job being very comprehensive in everything, not presenting it as like this, we're going to be the next X, or we're going to be the next SpaceX, or whatever product. There's nothing wrong with saying that, but you also need to say the realities of what is going on with what you have. So where you'll get screwed up if you're doing a 506B and you talk about it broadly, you'll get in trouble. At some point, you might not get in trouble initially, but at some point you will get in trouble. If you sell to ineligible investors, that's a huge problem. Under 506C, anybody that's unaccredited, that's a no-go. Under 506B, once you hit that 35 unaccredited cap, no more unaccredited investors. And you got to be bright line with this. It's not, well, maybe we'll let you in. We'll have 37. You might not get in trouble initially, but where you get in issues is if, say, your investment has losses, one of your accredited investors is really pissed off, which happens, and they decide to sue you. And in the event of that litigation, it comes out that you had more unaccredited investors than you should have, or you took unaccredited investors under 506C. They will report you to the SEC. So not only will you get sued by one of your previous investors, they will then then you have to deal with the SEC, and they get to show up. They get to take all your documents. They can go as far back as they want, and that can create all kinds of problems. Um, so 50B, another one. We already talked about failing accredited verification under 506C. You do need to provide more disclosures under a 502 disclosure to unaccredited investors under 506B. And I'm sorry if this sounds like I'm just like saying all these 502, 506. This is my second language now, so it kind of just rolls off my tongue. Do not create a 506B and 506C offering and run them as one offering. That is, it's going to cause problems. Make sure anti-fraud omissions and misstatements be upfront. Hey, here's the potential problems. You don't want, you know, you want to have your separation of funds, like all the things you can think about. You want to do all those. And then one big thing in this space, we run into a lot with people that are trying to put deals together is how they are compensated. And when you have the unregistered finder success fee, that is a huge problem that, people find a way to negotiate around that. They find ways to be creative around it. And I can't tell you how many of my clients just don't do it. Like, if somebody actually has those connections, pay them a flat fee, that pay them $5,000 and make it a contingent on them setting up 50 appointments or whatever. But you cannot have it tied to, hey, if every dollar you raise, I get 2% of. Unless you have a broker dealer license, you're going to get in trouble. If you want to do that, just go become a broker dealer. It'll take you about 6 months, and then you can do all those things you would like to do and get paid for them. Any questions on those things before we get in? That's kind of the rest of this is going to kind of get into entity structure, roles in a deal, different types of deals you can do. Any questions before we jump into this other stuff? Go ahead, Danny.
Yes. So if you have somebody that says makes introductions, and
Mm-hmm.
instead of paying him or her a percentage, can you say, I'll pay you, I don't know, say $500 for every introduction, where it's the same
Mm-hmm.
amount, regardless of the
Yep.
size of the investment?
Yeah. So if it's not tied to success, then you're fine. If it's just, hey, I'm paying you to set up each one of these meetings, irregardless of what occurs in the event or in the meeting or afterwards, if they write you a check,
Right, right.
you're golden.
So
You're
so
fine.
so
That
So who has the burden of proof if somebody says, "Oh, I'm a connector and I connect people, I do this for everybody. I want to do it for you." Is it our job as operators to ask them, "Are you guys registered?" to see the registration, or how does that work?
that's a great question. I would The way I would treat it, if you're really serious about being a fund manager, I would take on all the burden of proof. Um, I would not, if somebody says they're a broker dealer and it's like, all right, what's the name? You know, can I look it up online? Are you on the website? Great. Like,
Right,
they've
right,
told you, run with it. If they're not registered on their end, and I mean, it's something you couldn't have discovered with just like
correct.
a Google search, then that's on them because they told you, they signed, you're going to have an agreement, a broker dealer agreement that says they're representing that they're a broker dealer. You have no liability for them not. Like, like, you want to have a contract, you want to do some basic research, make sure that they're on the website, that they are, a part of the firm, that will be representing you, that they'll be representing you through. And so just be very I would be cautious, in those types of deals. Make sure, um, make sure that they are licensed, that they have some level of licensing. Yes.
One last question. Equity brokers, the guys that connect you to family offices, private
Mhm.
equity firms, do they need to be licensed to do what they do? They usually charge a percentage of the funds that they provide.
So generally, yes. One way they could get around it is by making them a GP in your entity, giving them like a co-GP. If you want, if they are able to bring in that caliber of individual, then they can be along for the ride. You just cannot compensate them. Even in that scenario, you cannot tie their compensation solely to them bringing in money. So I can't say this person's a GP, but they get 2% of every dollar they bring into the entity. It's
Mhm.
they're a GP. We have an 80-20 carry. They get 25% of the carry.
Okay.
Does that make sense, Danny? Did I answer your questions there?
Yeah, yeah, I think it does because there's like equity brokers that are out there that connect you, but they usually charge a percentage of the amount of money that they bring in.
Yeah, and they need to be a broker dealer. And if they're not a broker dealer, and I know there's lots of people that hold themselves out and that say they'll do it for a percentage, even though they're not a
Mhm.
broker dealer, and they'll back it in, they'll write the contract, they'll do all those types of things. But at the end of the day, it can just create so many issues.
100%. All right, very good.
Cool,
Appreciate it.
cool, awesome. Alberto, okay.
Great presentation, Joseph. Just a quick question in your knowledge on this area. What will be ideal scenario when, I as a fund manager would like to work with other funds, either funds of funds or JV, so we can do it probably at the beginning on a project specific basis, so we don't have to go further into the GP participation and other partners and all that. How we can make that in compliance with this especially if I was 6C, that we're not getting in trouble, and it's a win-win.
So do you want to set up a fund or do you want to do a one-off deal with them?
Let's say that we do a one-off
Mhm.
first. How would that look like?
So will they be investing into the project then, or will you be partnering with them as a GP?
Let's say I, as a GP, bring a self-storage deal to another fund, and then the fund's
Uh-huh.
gonna help me capital raise. And I don't know, some people have different opinions. They can
Yeah.
enter as a LP or some other agreement.
Yeah. So in the instance of say, I think a very simple way to do that in that instance is create them as the LP, or if you just have a simple LLC, you're the manager, they are like B class unit holders. You have a carry, say it's capital returned 80-20. That's the simplest way to do it, to explore a relationship and see if it's a good working relationship. Obviously, if it goes and they want to be more involved, where they say, hey, we can bring $100 million to the table, but we want to be a co-GP with you because what you're doing, we'll be the co-GP, we'll bring all the money. You're basically going to be the manager and operator. I would go down kind of like co-GP route with them, and just, you create the GP entity, you put, both of your entities go into that, you figure out the equity split there, how that works. Then you'd have a management entity, and then you'd have the LP. But I think it's very simple to start out more of like a test project by project basis.
Thank you, Joseph.
All right, awesome. Jerry, what can I do?
Thank you so much for having me. I appreciate all the information. So one of the things I'm always confused about, not confused, but always worried is like this accredited, not accredited. Obviously,
Mhm.
you're saying if I'm gonna build, I'm sorry, I had my camera off, but you're saying if we building for non-accredited, I know the laws changed a little bit, but we're talking about okay, this my net circle is doctors and entrepreneurs and other people like that. So non-accredited, it's 200K. So we're looking at those people can be. I would have to create an LLC that is a B 506B, right? and it can't go more than 35.
Yeah, so if they've made over 200,000 a year for the last 2 years as a single person, or 300,000 jointly with their spouse, they're an accredited investor.
They can,
And
okay.
so a lot of doctors would qualify that for that,
Okay.
just
So when
based
it,
on how much they're making a year.
okay. And so, for instance, like obviously let's just say if I want to create a fund and I have an LLC, the structure itself, what are we telling the quote unquote the accountant or the person that's creating the LLC or I mean, I know if I have to reach out to Fund Launch again, but if I'm creating an LLC and I want us to start telling my family members and friends, hey, you investing in this, why don't you hold your money off for a little bit? I have this thing I'm doing, and it's going to help us all out and big tax benefits and blah, blah, blah. Do you do the fund first, or can you start gathering that money and putting under the LLC? Like, what's the thing to do that is not bad, but at least for people to start knowing that, okay, Jerry's working on this stuff. Let's look at what he got.
Yeah, so that's a great question. So if you set up an LLC and you're going to do an offering, and you're going to do it a 506B to just people you know, and you have 35 unaccredited investors that you want to be involved, you can just have them invest into an LLC. Now, in that in that instance, you're going to want a PPM.
Mm-hmm.
You're going to want, subscription documents. Now,
Mm-hmm.
And so those are what you're going to need. Yeah, I call them the offering documents.
Right.
And so you need to put those together to be able to go get those investors. Now, if you want to do the 506C, I mean, it gets complicated, but you can have two offerings. One of the things, I think 506B, people get very excited about the 35 unaccredited investors. The issue around that is if you're really like, hey, I have an audience of unaccredited investors, I'm going to go do this. We're going to put into properties and we're going to go. I actually recommend my clients go to a Reg CF platform and do an equity crowdfunding. And I didn't include that in this conversation, but that is, you can have up to 1,000 unaccredited investors come through equity crowdfunding, and then you can also do a 506C concurrent accredited investor fundraise into the same project. And that I actually do that for quite a bit of my clients, is that they're doing an equity crowdfunding, and then they have people who come to them and say, hey, we want to put some real money in. We're not going to do non-voting shares. And in those instances, you do both offerings. And so you have a Form C, which is kind of like a mini PPM that you have to file with the SEC. And then you do a 506C. And I probably just opened up a whole box of questions about what is equity crowdfunding. I'm sorry, I should have included it in one of these slides, but I was focusing on 506B, 506C specifically.
Because I looked at a lot under like, okay, do I go to Fund Launch? Because Fund Launch has so many different options and stuff. I'm like, okay, do I open a fund like right now, pay whatever they're asking, create a fund, and then have all the family members dump their money in it, and then I go look for assets that are based on what the investors are wanting. Okay, maybe they just want cash flow, another might just want tax benefits, right? So my question is, okay, do I do an LLC with the PPM, what you're saying, or do I just go straight for the thing? Because if I want to just try to get people money right now and get them ready for different assets investment, if that's the route to go, or just start their LLC and be done. Okay, it's just I don't know which one is faster and which one takes a lot longer, or which one gives me more flexibility and versatility, because honestly I can get people's money together and go do stuff versus taking my own money.
That makes a ton of sense. Jared, if you do want to dig into it more, my email, I'll put my email in. You can just shoot me an email. We could set up a time to talk.
Okay, perfect. Thank you.
I've worked with a lot of the fund launch, fund formation stuff. And I have some other creative ways of going about it with the Reg CFs if you do have more than 35 unaccredited investors you want to incorporate. So Corey, can you throw my email in the chat? With my screens are all taken over
Absolutely.
by my
Yep, I'll throw it in there.
decks. Anybody that wants to set up an appointment, just shoot me an email and I'll send you my calendar link.
And actually, there's a
Thank you so
good
much.
Jared.
there's a good question in the chat as well. Arlette brings up, so if somebody brings capital to a deal and they're given a co-GP spot, but they're not really, maybe the sponsors of the deal don't want them to have decision-making power. How do you kind of, I guess, as she phrased it, carve them out or limit their influence on the deal?
Yeah, so in the GP, so a GP is really just a limited liability company. It's really just an LLC at the end of the day. GP is a fancy name. You just have an operating agreement. You create them, give them Class B units, non-voting, non-managerial shares, and that they receive their equity based on their ability to bring in money. And the compensation needs to be tied to the carry when money comes back out from profits, but you can tie how much equity they receive to how much money they bring in, and you can limit their management control over the GP through your operating agreement.
Awesome. I think our let's at dinner or something like that. So hopefully she got that. But why don't we get one more question in? We'll provide Joe's info in the chat as well if you guys want to send him an email or set up a call with him.
Yeah.
And then we'll move on to the next presentation. And Joe, if you can stick around as well, grill the next presenter, that would be great too.
Yeah, definitely. I'll try to. Yes, I'll stick around. But yeah. Anyone shoot me an email and then I'll just respond with my calendar link, and then I'd love to talk to you and learn more about what you're doing.
All right, Sylvia, why don't you ask the last question before you present your deal?
Well, I was just going to ask on a 506B, there are people that say if someone's non-accredited, sophisticated investor and they're in the deal, that they can refer people that you actually don't know, that you don't have a prior relationship with, into that 506B.
Yeah. And that's where the 506B, kind of like the tenuous relationship where people are referring in, you're not going to run into trouble if people are referring people to you. You're going to run into trouble if you start soliciting broadly. Because if people are introducing, I mean, technically under 506B, you have to have a prior existing relationship with them.
Right.
However, if somebody's introducing people to you, people will say that exists prior existing relationship with the individual that introduced you to them counts. And I mean, you can dig into it on a piece by or a deal by deal basis, basically, or investor by investor basis. But you just want to be careful that it's not like 4 or 5 people removed, and it's like, well, this person introduced me, this person, that person, and they saw me talking on Corey and Joe's like weekly thing, and then like you don't want to get so far removed from people you actually know. And I mean, at the end of the day, like people really get caught up on, hey, it's 30, I can get these 35 unaccredited investors in. The 35 unaccredited investors are most likely won't move the needle on your deal. I mean, most of that is just, hey, I want my dad to be able to invest. I want my siblings to be able to invest. Because if you're trying to raise $1 million, 35 unaccredited investors are not going to get you there. And if you say, hey, I have a ton of unaccredited investors I want to put in a deal, there is a Reg CF equity crowdfunding where you can pull them all in, and it's not very expensive alongside it. So does that answer your question, Sylvia? Sorry, I get talking sometimes. It's like pressing play on it.
Just trying to understand, is it like legally a sticky situation, or is it acceptable? Like
it is acceptable. You'll see that a lot in like venture firms will go out and people will do introductions, and it doesn't turn into a 506C offering. And so yes, if people are introducing them to you, I would say you're okay, most likely under a 506B, but it does say in the law there needs to be a prior connection with that individual. It's just that it's kind of where these introductions of someone invested and hey, my friend now wants to talk to you to also invest, that is kind of into a gray area where people have said that's okay. However, I'm just telling you, under 506B, it says a prior connection.
Okay.
So I can't give you legal advice because we're not in like a attorney-client
Right.
relationship. I'm not trying to say that to get you to hire me. I'm just telling you what the law says, and then what has kind of been generally accepted is that you can do that.
Got it. Thank you.
Again, that was Joseph May, our securities attorney, going over 506C, 506B entity structure, stuff like that. Again, for educational purposes only, this is not legal advice. This is not financial advice. Hope you got something out of it. If you want to hear more about something specific, leave a comment below. We're working to bring you something new every week on our live calls, and then uploading those clips to the channel, as I mentioned at the beginning of the video. If you're interested in getting a hold of Joe about legal advice, legal information, I believe his contact information is at the beginning of the video. Feel free to reach out to him. If you don't see it, drop a comment below. We'll put you in touch with him. Happy to do so. And thanks for watching.